What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a massive piece of FUD, fear, uncertainty, and doubt over Citadel supposedly basically liquidating their entire portfolio. Now, this is just not the case, but at face value, when you look at this filing, it does look like they did liquidate a vast majority of their holdings, but that is really not the case, and we're going to go over the situation in its entirety throughout this video. We also have some more updates on this reverse repo situation, so we're not going to cover that in depth because those were the topics of yesterday's videos, but this is a very important developing piece of news that I think everybody needs to keep their eye on. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull and help out and support the channel, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks valued up to $1,850. And if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. So looking at the chart of AMC today, we are having an absolutely phenomenal day again. We are up at the current time that I'm recording about 18.5%. We did cross the $20 mark in the pre-market trading, but there's typically not enough volume to actually sustain those types of prices in the pre-market and aftermarket trading periods. But if we are able to see a push over $20 a share today, things are going to get very interesting. Now, when we come over to Ortex, we see that as AMC is edging closer to $20, the price increase this week has created losses of close to $700 million for short sellers in AMC alone. The short interest at the current time is 17.4%. Now, additionally, I also have a Twitter, so if you guys want to go have fun with me on this Twitter, make sure you guys go give me a follow. Now, coming over here, this is where we are going to get into this reverse repo situation. So shout out to Carlos Trades Rockstar_stocks on Twitter for putting this out there today. Today's repo amounts to $450 billion. 2 things can happen. If the Fed doesn't increase the limit, the market collapses. Margin calls everywhere equals mother of all short squeezes. If they increase the limit, the system will implode eventually. Market collapse, margin calls, mother of all short squeezes. Now, in my opinion, if they do increase the limit of the reverse repos and the repos, when they kick the can down the road, they are just delaying the problem and making it worse. So even if they increase the amount that they can issue in these repos and reverse repos, it just makes this situation worse once the margin calls start coming. Now, when we come here, obviously this is going to be another reverse repo. All of the giant numbers that we have seen on the different reverse repo or on these different loans that we are seeing have been reverse repos. And I know this is hard to see, but we can see up here it's about $450 billion. Now, what do these reverse repos suggest? Now, there's 2 things that they suggest. One is going to be either a liquidity crisis / too much money out in the market right now. The second, there's a massive collateral crisis going around. Now, we've been able to prove that there essentially is a collateral crisis right now, meaning that there is not enough collateral out in the market to enter and exit some of these positions. We are seeing all of the different regulatory institutions, such as the NSCC specifically and the OCC, increase the minimum margin requirements that their members have to input into their accounts in order to execute their trades. For the NSCC, it was about $10,000 to $250,000. That was the increase per member, and they have the right to increase that if they feel as if one of their members is over leveraged in any position. And then the OCC had to raise about $588 million. Now, these different increases in the reverse repos also have to do with institutions like Citadel just going out and drastically overshorting the 10-year treasury market. But if you guys want more information on that, I don't want to sound repetitive. Make sure you go watch my videos from yesterday. So now let's get into this actual situation that we have going on with Citadel right now. So when we come over to this page right here, this is kind of what everybody's freaking out about. This is a 13F filing, and the file date was May 21st, and we can see the manager, Ken Griffin, at Citadel Advisors, LLC. Now, I want to take a very close look at this section right here. All hedge funds or institutions that manage over $100 million are required by the SEC to file quarterly reports on their holdings. These reports are called 13F reports. However, the filings are required the following quarter from the reporting period, meaning that by the time the filing is made and we see them, the information could be 5 months old, meaning that these trades that Citadel made could have been made on January 1st, 2021, and we don't know when these trades were actually performed. For funds with long-term positions that make few trades, the holdings might closely resemble their current holdings even after several months. However, for funds that have high turnover, the holdings data we see might differ significantly from their current holdings. Now, Citadel they do engage in high-frequency trading, so it is possible that the portfolio that we are seeing here is completely different than what it actually is right now. Now, here is where it gets important. Institutions are required to report call and put options, and those positions are identified in the table. Now, we do see that Citadel is overweight on puts in their AMC position. Everybody pretty much knows this by now when the original 13F filings came out. However, they are not required to report their short positions. So this is really helping out Citadel, meaning that even if they have a massive short position on AMC, GameStop, or any one of these other stocks, they don't even have to come out and report it. And this just goes along with what I have been saying continuously, that the short interest that we are seeing on the different data reporting sources, such as Ortex, are most likely way understated, because it is in these institutions' best interest to come out and not even closely report the accurate amount that they actually have on their shares sold short. Now, when we look here, we can see the change in percent of their holding amount, minus 100%, 100%, 100%, 100%. It just keeps going. The only position that it seems like they currently have is PaySafe. Everything else on this table is a complete liquidation. So everybody has been seeing this and essentially saying, well, this is really bad. Citadel has basically liquidated their entire portfolio. They must be covering their shorts. That is not the case. This is an amended filing to their previous 13F filing. There are actually two filings. Now, when we come over here, so this is going to be Citadel's actual page on Fintel. So latest 13F holdings, performance, and assets under management. We can see here that the portfolio value is listed at $407 billion. Now, when we come over back here, that PaySafe position that we just saw is not even worth anywhere near $407 billion. So we know there is something going on with this. We come down here, Citadel Advisors LLC disclosed 13,104 total holdings in their latest SEC filings. And when we come up here, they opened 5 new positions and closed 1,070 positions. Actual assets under management is this value right here, this $407 billion, plus cash, which is not disclosed. So Citadel Advisors LLC's top holdings are the Spider S&P 500 ETF, the SPY, Tesla, the other, I think that's the same thing right there, S&P 500. I don't know why it's listed twice. Amazon, and also I just wanted to bring this up down here. Citadel Advisors' top industries are fishing, hunting, and trapping, legal services, which I believe that they're going to need a lot of over the next couple of months, and miscellaneous repair services. So that's kind of interesting. But when we come over here, we can see that they still hold a very significant position in a lot of these different companies. Now, a Form 13G is filed when an institution is going to own or already owns more than 5% of a company. Now, we can see ownership percentages right here, 8.4, 5.9, 5.2. A couple of these they have actually sold off of. As we can see here, the change in the percent of their position, minus 60%, minus 64%. But in general, Citadel still holds a massive position in a massive portfolio. I also want to quickly bring something up because this is going to get towards the end of this video, but we are seeing AMC have a great last couple of days. Now, I've been talking about this a lot over the past couple of weeks, and hopefully you guys are fully aware of what is going on with this AMC situation, but the hedge funds, in my opinion, are letting AMC run up to a certain amount before we see this share recount over the next couple of weeks. Now, the reason for this is that if the stock either runs up enough, it's going to entice a lot of people to sell that aren't fully involved with this movement. And if they are able to manipulate the stock over the next couple of days, so Thursday and Friday of this week, it could actually entice more people to sell because they may think that they have missed the squeeze. Now, the squeeze has not even started yet. As we saw last week, we saw AMC go from about the $12 range all the way up to $14, and then we saw it get slapped back down into the $12 range. Now, this was the first, sorry about that, the first sort of pseudo squeeze that we saw for AMC. But what ended up happening to the individuals that held their position and continuously bought more? We saw AMC bounce around in this $12 range for a little while, a little bit dip down into the 11s, and then a massive rally up to almost $20 a share. So at the current time, it is very beneficial to individuals to stick with your own plan. Do not let any of these outside sources dissuade you from any of your investment decisions. And that goes for all of us YouTubers as well. If you guys don't feel comfortable putting any more money into AMC than you already have, then don't. Only put in enough money that you are fully comfortable with investing. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a really great day, and I'll see you guys in the next video.